Vaibhav. In today's session, we are seeing the Euro USD struggling closer to 1.225, and in light of the resistance on the higher side, I feel some correction is pretty much due, and we can expect the Euro USD to decline towards 1.220 or even lower than that. So, in this session of market movers, I will be making you familiar with some of the key levels which can help us taking advantage of this emerging situation, and we will be looking to go for the short sale trade in this session. So let's get started. If you consider the data docket for the day, there were not many releases on the economic front which might have moved the market, and for the Asian trading session as well as for the European trading session, it was almost blank. For the US, we got the MBA mortgage application numbers for the last week, and here we are seeing the decline, and if you consider the 30-year mortgage rate, it has slightly increased. So I think there is some correlation as the interest mortgage rates have started to go up. We are seeing some decline in the number of applications for the housing loans. On the other release, we had this WTI, crude oil inventory data by EIA, and here we are seeing the that inventories have declined by more than 1.7 million barrels for the last week. I think I got this figure wrong here. It is not 1.62. Instead, it is 1.745 million barrels decline to be precise, and this is likely to help the light crude oil prices, which have traded sideways in most of the session, and I feel some upside can be expected in the light crude oil prices, but I will not be going into the technical aspects of it. Rather than that, the focus is simply on the currency side, and first we will consider Euro USD's technical outlook, and then I will also be shedding light on the USD JPY. In last session, I had talked about the support on the lower side for USD JPY, and that has uh, that has proved quite well in today's session, and we have seen the USD JPY holding above this 108.5, and now it is trying to climb higher, and we are expecting the break above 109. So we will be looking at the trading opportunities there. Let's start with the Euro USD technical outlook. This is the daily time frame chart, and here the Euro USD is consolidating after getting closer to 1.225. And if you consider this charting on the daily time frame, here this was the high made in the late Feb, and after that we had this decline in which the Euro USD has gone all the way towards 1.17, and from there on it reversed course and started to rise, and it has been quite a rally for the Euro USD. And now after this fantastic rally, some correction can be expected here on these levels. And looking at the price trajectory for last couple of days, we can say that the 1.225 has acted as a strong support, a strong resistance area for the Euro USD, and as a result of that, we are seeing that on the higher side, the gains have been capped, and it has traded sideways. And in today's session, there is a renewed selling pressure which is pushing it lower. So if we consider the technical parameters on the lower time frame chart, we have the first resistance of this month's pivot point series, which was breached in the last week, and after that the Euro USD has consolidated with moving moves on both the sides. So we can't really take help of this first resistance while looking for a trade. And if we consider another technical parameter, it is still inclined on the higher side. But one thing to take note of in both of these indicators is that we are seeing now the price action shifting gears, and if we consider the regression curve, the price action has moved to the lower band of this regression curve, and as a result of that, some flattening can be expected in due course of time. And for this resistance, the first resistance of this month's pivot point series, I think as long as we have the price action above it, it is likely to remain supported from the lower side also. So we can look for the trade, but the trade will have to be kept quite sharp, the stop loss and the target price. So you can say that it will be better for scalping trades rather than big swing trades, as we don't really have much clarity on the technical side, and as a result of that, it will be prudent to be cautious while taking any trade. So if we consider the intraday trade, I think we can look to chart the Euro USD anywhere closer to this 50 SMA area, the 1.223 to 1.224 price zone. And on the lower side, we can expect the move toward this 200 SMA at the minimum, while the stop loss can be kept just little above the day's high. The price area of 1.226 should be good enough for the stop loss, and unless and until we have a fresh breakout on the higher side, I am expecting the Euro USD to trade sideways with bias turning bearish. From intraday perspective, we have the trend on the longer time frame chart still bullish. So on the lower time frame chart, we can't really say if the turnaround is going to happen. But I think after this rally, some correction can't really be ruled out, and if we want to take advantage of these changing situations, we can take the help of this convergence area of 50 and 100 SMA, and that's why I feel the price band of 1.223 to 1.224 is a good enough price band. And here we are seeing the renewed selling momentum in the US session, and that can be utilized for our trading purpose also. And as I said, the stop loss can be kept closer to this immediate swing high, and that should hold well. And this is going to get us the risk reward ratio of 1 is to 2, not precisely 1 is to 2, but fairly close to that, depending on your entry point. Now let's see what's the USD JPY chart is telling us. This is the daily time frame chart, and here the USD JPY has consolidated for last couple of days with support coming into play around 108.5, and in today's session it is seeing renewed buying momentum. And I feel, looking at its current price trajectory, the breakout above 109 is likely to sustain, and in due course of time, we can expect the USD JPY to even rise toward this prior swing high, the price area of 109.75. So if we consider the lower time frame chart, we can take help of this central pivot point, and as and when we will have a breakout above that, and if the price momentum is able to sustain after rallying past this central pivot point, I think the near term outlook is likely to change from bearish to bullish. And if you consider the price action so far this month, it has been more or less sideways. And on the lower side, this support area of 108.5 has kept the USD price downside cap. And now that we are seeing again the bulls trying to take reins, we can go for the buy trade anywhere around 109, while keeping the stop loss closer to the day's low of around 108.75, 108.8, and on the higher side, we can expect the move towards 109.2 at the minimum, and beyond that, even the price levels of 109.5 can be expected, but that is likely to take time. And as a intraday trader, we will have to be mindful of these, that we might not see the big move in today's session, and if you are willing to take the swing trades, then the time horizon will need to be widened. So if we consider the intraday chart, the support is there around this convergence area, and that's where we have seen the USD JPY find the buyers, and it has spent most of the day holding well above these 150 SMA convergence, and now it is even trying to cross above these 200 SMA, and that gives us hope that we can expect the USD JPY to get closer to the prior swing high. So the move towards 109.3 can be expected, and if you want to go for the fresh trade, I think the price band of 108.9 to 109 is quite good opportunity, is going to give us good risk reward ratio also, as the stop loss is going to be fairly sharp. Anywhere closer to 108.75 should be good enough, and as I said, the higher side move can be expected to last at least till 109.3 or even beyond that, and with that the risk reward ratio works out quite favorably. So that's it from my side for today's market mover session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Thank you all for joining in. Have a fabulous day ahead. Do subscribe to the Ducoscopy webinar channel. See you next time. Till then, goodbye.